Joining me now on the Daily Ledger Page 5 beat from Nashville, Tennessee, economic analyst, hedge fund manager, and contributor to Forbes and other major business publications, Thomas Landstreet. Tom, if Mueller had recommended an indictment, which he can't, but let's just say, for the sake of argument, if he did make a case for indictment, I think that the U.S. markets certainly, and probably global markets, would be in chaos right now. It wouldn't be a good thing. On the other hand, we don't have that. And so it seems like this is a wonderful signal for the U.S. economy to maybe be poised for even more growth.
Well, I'll tell you what, it's going to calm down a lot of the noise that would have torn away its sentiment, because this would have led, of course, to an impeachment. And what would we have heard every single day? It would have really torn it to shredded I think like I said, sentiment in the markets. As far as the stock market and the economy, I think that the markets at least had already decided there was no collusion. So it's really neutral to that. So now that there's no impeachment, of course, that's a huge positive. Our next step would be trade. I'm not that bullish, as you know, on the U.S. economy. I got to see first quarter numbers, Graham. We have a genuine slowdown. Trade is a huge reason we've been prospering so well. I'm not against Donald Trump's trade actions, as you also know, but I'm very wary about the slowdown. I want to see the first quarter behind us. So as for the global economy, it's still pretty weak. The next stop is trade. This strengthens his hands in trade, as you may imagine. I think he'll get a little bit tougher now because he's got a tailwind. I think that's probably good in the end. Not great for the economy necessarily right now.
And one of the red flags maybe you're looking at is this inverted yield curve. And I don't want to get down in the weeds in that, but essentially it's when short-term rates exceed long-term rates. And this is one of the indicators potentially of a recession. So we have a lot of people running around, oh, recession is coming, recession is coming. But it's just one factor of many.
That's right. And by the way, correlation does not always lead to causation. You could say that every recession predates an inverted yield curve. It's just as easily to say it vice versa. I don't think it's a very good indicator, honestly. But what it does say to me is short-term rates, Graham, are too high. The Fed needs to cut short-term rates, something I've mentioned on your show numbers of times. You and I discussed this. They did moderate their aggressive increases. I think they cut next. Now we're talking. Then we'll see a normalized economy and really some upside.
And on the other hand, mortgage rates are very, very low right now. It's a very favorable time to buy. So that's one sector of the economy, again, in 2019 could be poised for blast-off. Thomas, thanks.
Want to see more videos like this? Click on the link below and subscribe to One America News on YouTube. And call your cable provider and kindly demand that One America News is added to your lineup. Call and subscribe today.